Hello guys, good morning from here, 1:22 a.m. So I want to share you guys analysis that I did on good, but it happens to be I didn't take a screenshot. But anyways, since I have no proof of that, so that is by the way. So but remember that I once had a session with few members of the mentorship, and I told them about gold trading lower to areas where we're having imbalance, and also we're also paying attention to what the DXY is doing. So that is by the way, just by the way. So now we are going to focus on the analysis. So I'm going to break down gold and tell you guys my outlook on that also. And now the reason, the question there is, why did I pick this area for sale? The answer is a favorable gap, but that is seen on the 4-hour time frame, but I'll explain that later on. So we are going to do our breakdown analysis right now. So I know I always start from the monthly time frame, and you know our charts starts from the monthly time frame, but I would love to go to higher time frames. So now I'm going to be deleting these stuffs. Alright, so I really want you guys to join me here as we do this analysis. Now I am going to zoom out, and we are going to look at gold right now on the monthly time frame. Right, so you can tell that from this point, since the year 1983, and then we got into 1976, we saw gold shifted, and we see gold going bullish. Right now at this point on the 1 month time frame, now I get to mark out my major highs and lows, where we have the external highs and lows. Pointing out, we have this high right there, and we traded lower, seeing this low. Now these are my points, the major points I get to mark highs and lows, and this was formed at 2016. Right, we now get to see it trade higher. Now the focus now is looking right here, what occurred right here. So when we traded higher, we took out this high. Now if you are likely to pay attention to what is happening, what happened at this high, you can say with me that we have a purge right here. Alright, so now price trade higher to take liquidity from buy stop resting on the high. So you can actually see how it was ranging at the high right there. Alright, so let's just pause for a while. Now I want to go to the some higher time frames to actually look at that. We have the 3 months right here, and you can actually see right here when we hunted liquidity right there. And now we hunt liquidity, and after hunting the liquidity, we saw that we are now left with towards a new all-time high. This right here is a new all-time high. So that means gold is now expensive, and it has given us a major high. And my own idea, I think its next thing is to do is to give us a new low. Alright, so we're having an all-time high, a new all-time high. Take out the highs from 2011, and you can actually see it consolidating right there. Purging is actually creating, like, liquidity is like taking out liquidity right there, hunting liquidities right there. Alright, so this right here is a ranging market. Right, if you pay close attention to it, you actually see it's a ranging market right there. Likewise, going to the 6 months time frame, you can actually see that when it spiked that high, it is not a break of structure, and then we traded lower. Now when we traded lower, what do we trade into? We trade into a 6 month fair value gap right here. From the 6 months, that is our 6 month fair value gap right there. So we mark our fair value gap right here. You actually see that it went to our 50% right there. Okay, and it still went lower right there. So I think I placed this wrongly. This is how I'm supposed to place it. Alright, right there. So we traded downwards below 50%. We entered close to 0.78 Fibonacci level. Right, so we trade into imbalance, and if you pay attention also, you can see that right here we have violation of sell side imbalance, and was drawn to that high, and now we have hunted liquidity at that high. Currently we are seeing it ranging right here, right? So that is for 6 months. We already see what happened right here, trade into a fair value gap, and we're now going down to our 3 months time frame right there. Well, before we traded into a fair value gap, we actually did a hunt right here, grabbing liquidity from there before trading higher. Right now, this is a 3 months time frame, right? So price did a hunt on previous 3 months high right there. So if you guys remember the month of February, I said we should buy gold up to this high, and if you pay close attention, we almost hit the high. So it happens to be it didn't hit the high, and then we see it trading backwards, and now we're back to our monthly time frame. So this high is our 12-month high. You can actually see this market was ranging. There is no structure right here. Alright, this is a ranging market. So I predicted gold right here to buy the month of March, February, March. We traded higher, took our previous month high I talked about, and this is a 12-month high. It didn't even touch it. Did not touch it. Alright, so if you can remember, the analysis was done on forex.com right here. And if you remember the markup that I did that month, if you could remember, I said price on gold will be drawn to this high. We have already drawn to that high, and I remember this a ranging market. So I was like, after price takes out this high, its next draw would be stops on 12 months high. So we see, okay, right here on forex.com, it actually went for that high. So we sparked the high, and we actually hit it to 12 months high. So the prediction was correct. Depends on the broker though. Now we have taken our 12-month high, and remember I now said future draw to liquidity after buy stop we hunted. After buy stop we hunted probably. Alright, so what I'm trying to say right here is future draw to liquidity after buy stops was hunted probably. So I don't know, the English right here is not correct. So now we are not going to see if the prediction I showed you guys on the month of February and how gold was delivered. You can see the prediction I said we will hunt this high. After hunting the high, the future draw to liquidity is starts on 12-month range low. Did I not tell you guys that? If you don't know about that, you could go back to my videos. You'll see me predict gold. I use the algorithm deal range. I think that was the period where I introduced algorithm deal range to YouTube. So you should go there and you check that. Alright, and we're actually seeing it happening right here. Now, where is gold trying to go to after we have hunted? Right here, you can see its range right here, right? These two candles range, and this one hunted the previous month high. After hunting previous month high, we are now seeing it trading lower right there. So that is the reason why I didn't want to delete this chart, and I've been analyzing on wonder all this while. We can check. Let's check Pepperstone. All right, Pepperstone is similar to Forex.com. All right, so we have hunted our 12-month high, and now back to our monthly time frame. We saw that right here there's no structure formed on the monthly time frame, and the overall market was a range market right there, and which hunted buy stops from this high. So that right there is the purge right there. You can actually see it creating support, significant support and resistance right here. So now trying to see it go lower to stops on 12 months. So going down to the weekly time frame. Right here was the 12-month high. Remember what I talked about double top also. I said in double tops we always get to see a hunt most of the time on double tops. So what I actually want to tell you guys is that this POI right here won't be valid. Alright, and this right here not considered as a breakthrough structure, because the actual silver price was in there, it was ranging at that high, so it was used to create support and resistance. So that right there is a purge, and since it didn't break a major high right here, all right, and also identify that the overall market is a ranging market. All right, so going back to the monthly time frame, you pay attention that price took out, you actually see right here, right, this is not a clean breakthrough structure. So these hunts occur right here on previous month's high. So let's count 3 months. We have 1, 2, 3. So the 3 months is resting right here, so price is likely to be drawn to 3 months low, since it has taken out previous 3 months high. Its next drawn will be the opposite side of liquidity, which is having sell stops. So take this high, take liquidity, and be drawn to liquidity. So this right here will be our liquidity draw on gold right here, and that will be labeled as draw to liquidity on previous 3 months low. Alright, so right there is what we identify as our draw to liquidity. Let's take this chart off, and we take this off so that our chart will look clean. Alright, so we have marked out to draw to the previous to liquidity on previous 3 months low. Let's find our 6 months. We have 3, 4, 5, 6 right here. So this right here is you can actually see we're having liquidity resting right here. So this right here will be our 6 months low. Sell side liquidity pool. Alright, so we have identified those stuffs. Put on my account watermark. Alright, so sell stop resting right there, sell stop resting right here. That is our draw to liquidity. So back to the weekly time frame. Now on the weekly time frame, ever since we had the hunt, we now get to see how gold was trading. We trade sorry about that. We saw gold trading this way. So I want to take out my highlight, so put out a star. Alright, so we have gold trading this way. We see trade like this again, we trade like this, and then like this. Next expectation is to continue see it going lower, so we hunt the previous 3 months low. That is very, very understandable. Alright, so now I have to go to the daily time frame, and I will show you what I saw right there on the daily time frame. Now, since I already know that gold has been going bearish, and I know that all this while it's been a choppy market, so I was trying to pay attention currently right here because I know I will not be looking for a bullish structure. All right, because the market is not actually bullish. Now, we did have a hunt right here, but after we have a hunt, price didn't break structure, and the structure I'm talking about is this high. It didn't break that high, so we traded higher, right? And we saw a swing high printed for us, like it created a swing high right here. And after it created our swing high, we now see it trade lower. Now, if it has to go bullish, it would have used this fair value gap where we have an imbalance to go higher. So remember how we mark our fair value gaps and stuff. You always find the 50% equilibrium. So not using this side, we're going to use right here, start from here. So we mark this right here, and we look for the equilibrium. Alright, so I remember I promised to talk about theory of fair value gaps and imbalances and how the algorithm operates with that, but I think I'll start off with posting it on the mentorship. So right here, if price wants to go higher, it would have used the fair value gap right here. It created the imbalance, it created right here to continue going higher, but then it violated the fair value gap. All right, now what is the idea behind fair value gaps? Remember the last video I uploaded currently, structural break and confirmation. I said that the algorithm operates with filling up gaps, and while filling gaps is also balance itself on the other side. And if it wants to violate the side in which it is balancing, it will leave behind another imbalance. So once it violates the other one, it comes back into the fair value gap that was responsible to violate the fair value gap, and then balance it. All right, and the 50%, most of the times it goes for the 50% of the previous fair value gap. And also you also see me analyze that with VIX 101S and some other assets right here. Now, example of the fair value gap is, if you check right here, we have a bar side imbalance right here, right? And if you watch closely, as price was trading back to that area, we have 50% right here. So if you use Fibonacci, you mark this, you actually see that our 50% is resting right here, right? So we have our 50% right here. So when price got to the 50% of the fair value gap, right, we had a reaction right there. So we traded higher and still yet failed to break structure. That is how the algorithm operates. It wants to leave buy stops protected and withdrawn to sell stops. There's reason why it wants to do it that way. So we are not the algorithm. We just see what we just analyze the market and we predict everything. Now price has balanced 50%, trade upwards, and now it's reversing backwards. Now if you pay close attention to what it is doing, as it was tracing backwards to the areas of where we have the buy side imbalance, is balancing the sell side right here, balancing the sell side. Pay attention to that. It was balancing the sell side, right? And if you notice, it created imbalance right here, right? We have a fair value gap right here. So it quickly trades backwards, balance it, and now with rally downwards. Why going downwards? It is also balancing the sell side, right? Balancing itself till it hunted sell stop right here. So you always have to put your take profit areas of sell stop, because once price grabs liquidity from there, it's likely to reverse quickly. So that is the reason why you're taking profit at the swing high and the swing low. Alright, so gas balanced. Now it put backwards, right, after it took liquidity. Once it traded higher, you can see that it impulsively led behind a fair value gap right here, right? So now it quickly retraces backwards to the fair value gap, completely closing and balancing the buy side with the sell side. Right higher, create another imbalance, and right here we hunted liquidity. We are taking stops from this high, so we hunted this high, and you can actually see that high has double top, which was what hunted. I am not guessing, all right. It's something I've experienced a lot of the times. So whatever I'm teaching you guys is something I've experienced. I've took my time to study because I'm always on the charts 24/7. All right, I'm always on the chart. So we have that hunt right there, and we have grabbed liquidity from here. Probably, I think there is a supply right here on which it rejected. On those that trade supply and demand, they call that a hidden base, right? So price trade backwards to the fair value gap. If it needs to go higher, it would have reacted up from the fair value gap and then be drawn to buy stops, but it didn't. It violated the fair value gap right here. Now it retraced backwards to the fair value gap, and now we're seeing it selling. That is where I had my setup done on Wonder. Now inside this fair value gap, apart from it being in equilibrium right there, all right, it is in equilibrium. It balanced 50% of the buy side and also the sell side. Now the entry I saw was actually on the 4-hour time frame. So let's go to Wonder, because I've seen the chart was messy right here. All right, so let's quickly go to Wonder. I love analyzing on Wonder. So we're going back to Wonder right now. All right, so my charts analysis, let's go back again on our daily time frame right here. All right, so we level back our stuff right here. We had this one, and also we had this one right here that was balanced. All right, and then we have this one right here. All right, so then we had hunt on stops on buy side equity pool. We have double top right there. Then we put a checkmate to indicate that there was a hunt. All right, so okay, and then our fair value gap right here. So we just copy this, put it right here, put another fair value gap right here. Then we indicate our 50%. Sorry, not this. Use our Fibonacci, indicates 50% right here, and then our 50% is resting right here on the buy side liquidity, buy side imbalance right here. So price quickly traces backwards to the fair value gap right here, the 50% because of good encouragement, and we are rejecting right here because this right here has been balanced. Now the entry I saw was actually on the 4-hour time frame. It's a very clean setup. So the first thing I realized was that this other block right here is not a valid other block. As you can see clearly, it did not break structure. This right here is not a break of structure. All right, don't look at this as a break of structure. That is not even a structure. So the other block was violated right here. Like price trade deep inside, didn't give a confirmation on any sort since it didn't break structure. And this right here is not a break of market structure, is a liquidity. So I think ICT calls this turtle soup, or is it a Judas swing? Oh my god. I'm going back to gold. Alright, so after the hunt, we trace backwards to this other block and we see it selling. So talking about the entry I found right here, that was on the lower time frame, and that is right here. That right there was an order block inside a fair value gap, and that was on the 1-hour time frame. That is where I saw the setup to execute the trade. And an extra confluence was liquidity below the POI. So we're having a fake out zone right there. We're having buy side liquidity pool. There's pool of liquidity right here, and I know so smart value traders. I saw someone posting this as an entry, and then they got violated because I think they didn't pay attention to the higher time frame. And these days I've come to realize that whenever I'm on the chart, I should pay attention to imbalances, alright? Because price always draw to fair value gaps, stuff like that. So that was where I found the entry. If you go down to the 45 minutes time frame, you actually see the order block right there, and the tiny fair value gap price trade backwards to the order block, and we saw that rejection off from that area, as easy as that. So our draw to liquidity will be set stop resting on previous 3 months low, right? This low right here. So we go to the monthly time frame. This low right here will be where we are going to be drawn to right here. So I hope that this makes sense to you guys. I'm pretty getting tired now. So remember, did I share Solana with you guys? Yeah, I think I did that. I shared Solana on the last video I uploaded, I think. So I talked about fair value gap, trading to a fair value gap on the day time frame, and you can actually see it done right here as easy as that. We trade into the fair value gap, and we rejected up from the fair value gap, and now we did some little retracements down up here, and then we found it's now at this current price level. So as it is now, that's how it is. And apart from the fair value gap, is also another block right here. So I think I need to go to sleep because the time. So guys, I hope you guys get to study your chart. Please always pay attention to your higher time frame. Everything is on the higher time frame, alright? That is what the algorithm operates with. That's how the big banks works with. Alright, so yeah, see you guys next time. Be safe.